Keurig Green Mountain is being taken private by JAB Holding Company, which is a consumer products conglomerate based in Luxembourg. And I don't know about you, Taylor, but I was, as surprising as it was to see someone taking Keurig Green Mountain private, because keep in mind, Coca-Cola's got a 17% stake in this company. Even more surprising was the buyout price. This is a stock that closed on Friday at $51 a share, and the buyout price from JAB Holding Company is $92. Why are they bidding that much?
It's a really good question, because this stock has been the brunt of a lot of jokes over the past few years. It's not performed well. Even with this 80% premium, Coca-Cola shares are still down around 20% since they made that 16 or 17% acquisition last May, I think it was. So shares haven't been doing all that great, but looking at what JAB has been doing over the past year or so, they've really just been trying to compete with Nestle for the in-home coffee market. Nestle has the global Nespresso machine that a lot of people have on their counter. So the little pods, direct competition. They also own some small coffee roasters, Stumptown and Intelligentsia. I've heard of Stumptown, but apparently those are like for coffee aficionados, like the high-priced coffee beans. But then they own some stakes in Einstein Bagels and Caribou Coffee, and fully own Peet's Coffee. So I think they're trying to come at Nestle here, and maybe it's a bit of a rivalry that kind of helps spike that premium, because I can't remember a premium of 80% for a company struggling this badly on a buyout.
It really is surprising, and I'm wondering if they looked at some of the M&A activity we've seen in 2015, and I'm thinking primarily of the beer merger, where Anheuser-Busch made, what was it, 4 runs at SAB Miller?
Yeah, try again before
they finally got to an agreement. And maybe they just thought, you know what? It's worth it for us to come in with a Godfather offer just to make sure that not only Keurig Green Mountain is on board, but Coca-Cola with their 17% stake says automatically, yes, okay, we'll agree to this.
That's a good point, because what if Coca-Cola just decided, you know what, we could do this ourselves. Why don't we just pay a 40% premium? So then I don't think that they would have done that. Clearly they weren't willing to pay 80%. They were just willing to take the 80% bump in shares and run. But that they did say that they're going to be working with JAB Holdings going forward, because they still believe in the Keurig platform and what Green Mountain Coffee Roasters had been doing. So I think maybe with the combined brain power of this coffee specialist with Coca-Cola, maybe you see this private deal drive more value for Coca-Cola, what they originally might have expected back in May of 2014.
It's a pretty surprising, and by that I mean surprisingly bad year that we've seen. Just you look over the last 12 months, December 2014, the big thing Keurig Green Mountain was dealing with was the recall of their 2.0 machine, because they had a bunch of incidents where it was spraying people with hot
dangerously
liquid.
Hot water. Yeah, we all saw it.
And maybe that's why we saw a big short interest. By the way, this is a great example of one of the main reasons that I have no interest in shorting stocks, because this is a company that had a big short interest, and there was no real indication that anyone was on the hunt to buy this company. And if
I certainly hadn't heard anything.
If you're someone who's in the business of shorting stocks and you look at Keurig Green Mountain and think, oh yeah, I think this thing's going to fall even further, you're taking a bath today.
Yeah, I saw in Capital IQ, I don't know if it was updated this morning or if it was from Friday's numbers, but at 10:30 this morning, Capital IQ said about 10% of shares were sold short. So, and right now they're not even having, I mean, they're selling to cover, but that's not why the stock is up. The stock is up because of the premium. So, I mean, the selling might even drive it beyond the premium, because they really have to get out of this, especially if there's margin involved.